Right at the heart of the biggest technological shift of our lives, there's one company. And it's not just making the parts, it's literally building the engine for artificial intelligence. Today, we are doing a deep dive into NVIDIA. You know, NVIDIA has completely reinvented itself. It went from being a company known for PC graphics cards to what they now call a full-stack computing infrastructure company. This isn't just about selling chips anymore. Not even close. It's about an entire ecosystem, hardware, software, services, that is fundamentally changing, well, pretty much every industry on the planet. So, with its stock price soaring into the stratosphere and its valuation hitting these, astronomical levels, we're all facing a huge question. Is this a once-in-a-generation chance to buy into the future? Or is it a dangerously overvalued bet that's ignoring some massive risks right around the corner? That's exactly what we're here to figure out. All right, so here's how we're going to tackle this. First, we'll dig into the big risks, the bear case. Then, we'll look at the absolutely staggering numbers behind the bull case. After that, we'll face the valuation question head-on. And finally, we will deliver our verdict. You know, every great growth story has its challenges. And for NVIDIA, the biggest storm clouds are, without a doubt, gathering on the geopolitical front. This is where things get really, really complicated. This quote from the Atlantic Council, it just nails it. It perfectly captures the high-stakes world NVIDIA lives in. We're not just talking about business competition here. This is like a new kind of technological Cold War, and NVIDIA's chips are right on the front lines. And that tension, it creates a ton of uncertainty. Okay, so NVIDIA's two biggest operational risks are actually deeply connected. First, you've got the ever-changing U.S. rules on exporting AI chips to China. And second, as NVIDIA themselves point out in their filings, their entire manufacturing supply chain is packed into the Asia-Pacific, relying heavily on partners like TSMC in Taiwan. Any disruption over there could be catastrophic. And then you have the recent news about allowing sales of the powerful H200 chip to China, which just adds another layer of drama. Some say it's a smart, pragmatic move. Others see it as a huge mistake. Now, you might look at this and think, okay, 13% from China, that's not huge. But that would be missing the bigger picture. This is a strategically critical market. It's the exact spot where U.S. policy and NVIDIA's business goals slam right into each other. It makes this 13% slice maybe the most watched, most debated piece of NVIDIA's entire business. And this slide really lays out the strategic chess match that's being played. On one side, the argument goes, if you sell slightly less advanced chips to China, you keep them hooked on American tech and you shut out their own homegrown companies like Huawei. But on the other hand, critics are shouting that this gives China the very tools it needs to catch up in AI, possibly wiping out America's lead. NVIDIA is stuck right in the middle of it all. Okay, so that's the scary stuff. But now, let's flip the coin and look at the bull case, because despite those risks, the argument for NVIDIA is just overwhelmingly powerful, and it all starts with its competitive moat and its absolutely breathtaking financial performance. See, NVIDIA's real power, its moat, isn't just about making the best chips. It's the whole platform. And the crown jewel is CUDA, their software that lets developers actually use the crazy power of their GPUs. With almost 6 million developers building on their platform, NVIDIA has created this incredibly deep, sticky ecosystem that competitors are finding almost impossible to copy. They're not just selling you the hardware, they're selling you the entire AI factory. Now for the numbers, and honestly, they are just mind-blowing. For its 2025 fiscal year, NVIDIA grew its revenue by over 114%. Let that sink in. This isn't some tiny startup. This is one of the world's biggest companies, more than doubling its sales in a single year. That kind of growth is almost unheard of at this scale. I mean, just try to picture it. It's like a corporate giant suddenly learning how to sprint like an Olympic champion. The sheer speed of this growth is something we just haven't seen for a company this big. Next up, profitability. Check this out. A gross margin of around 75%. That shows incredible pricing power. It tells you that the world doesn't just want their tech for the AI revolution. They need it, and they're willing to pay top dollar for it. So think of it this way. For every dollar of stuff they sell, NVIDIA gets to keep 75 cents to cover their operations, R&D, and, of course, profit. A number that high is just a massive flashing sign that says market dominance. And finally, we get to the ultimate sign of a healthy business, free cash flow. In fiscal 2025, NVIDIA generated nearly $61 billion. That's pure, usable cash left over after running the entire company. And we're not talking about paper profits here. This is a massive war chest of cold, hard cash. It's money they can use for game-changing research, for buying other companies, or just to ride out any geopolitical storm that comes their way. This kind of financial firepower is a huge, huge advantage. So we have this clear tug of war, right? Immense geopolitical risk versus absolutely unparalleled financial strength. And this brings us to the central question for anyone thinking about investing today. What is a fair price to pay for this kind of power? Well, the stock currently trades at a trailing price-to-earnings ratio of around 50. Now, just for some context, the historical average for the stock market is usually closer to 15 or 20. So yeah, this is without a doubt a premium price tag. So here's the dilemma in a nutshell. The bears will tell you a PE of 50 is pricing in absolute perfection, leaving zero room for error and totally ignoring the huge risks in the supply chain and with China. But the bulls? They'll fire right back and say, you can't value a company that's leading a revolution with old-school math. They argue that this kind of historic growth and dominance absolutely justifies the premium. You're not just buying earnings, you're buying a piece of the future. All right, we've weighed the massive risks against the historic financial performance and that incredibly deep competitive moat. It's time for our final verdict. Based on our analysis of all the source materials, we recommend a buy on NVIDIA with a 12-month target price of XX dollars per share. Now, look, the geopolitical risks are very real, and you can't just ignore them. But the company's financial momentum, its deeply embedded tech ecosystem, and its leadership role in the exploding data center AI market, it's all just too powerful to bet against right now. So let's boil it all down. The strongest argument for buying is that unstoppable combination of financial performance and its software moat, all in a market that's set for explosive growth. The single biggest risk that could derail this whole thing? That extreme dependency on its supply chain. An event in Taiwan could just blow up all the financial positives in a heartbeat. This is the definition of a high-reward, high-risk play. Now, for investors who find that risk profile a little too intense, the market reports do point to two key alternatives. You've got AMD, which is NVIDIA's most direct rival, and their MI300X chips are starting to get some real traction. Then there's Qualcomm, a powerful new player focusing on AI inference, which is basically using the AI models, and they're promising to do it with lower power consumption, which is a massive deal for data centers. And that brings us to the end of our analysis. The AI race is really just getting started, and believe me, the stakes could not be higher. So we'll leave you with this question. Which company do you think will ultimately power the next decade of AI? Let us know in the comments what company you'd like us to break down next.